Inspire, educate, motivate, impact lives. That's my mantra. Welcome back to the Royalty Lifestyle family. This is Joey Royalty. I mentioned last few weeks ago, I should say, that I would have been utilizing my Wednesdays to get myself educated on a few things. I'm bringing this to this platform so that we can all learn together. Now, I'm looking on Wednesdays at Did You Know? So these Did You Knows are information that I'll be bringing to you where we can be able to learn and share with each other about these very educational content. Today, I'll be looking at IPOs. Before I went into the banking sector, I had no knowledge as to what an IPO is, and even within the banking sector, I really knew only about stocks, bonds, shares. I didn't know anything about IPOs.
I was living on a friend's sofa in Legani somewhere. No manner, man. You have to make a change.
And Ed, wrong provision. And yes.
It was still God doing for me to have met him instead of another guy.
If you're not yet subscribed, feel free to do so. If you love these type of contents, hit the like button and leave a comment. So for my new subscribers, I see you. Cheers to you. Bless you. Welcome. An IPO is an initial public offer. This is where an unlisted or privately owned company lists their share in the stock exchange market. So they go public so that they can have investors invest in their company to raise funds for various reasons. So it means that as an investor, you would know that you would have to firstly have what we call a brokerage account. Now, a brokerage account is really an investment account where you can buy and sell securities such as stocks, bonds, mutual funds, and ETFs. And you can be able to have this set up at various brokerage houses. So you have a lot of different companies where you can be able to find a capital market rep, or a broker, and they can be able to guide you as to how you can get this account set up. Now, I'll be looking at the requirements for you to have this brokerage account and the process and all of that in my next video, because I'll be only focusing on IPOs and the main reason for an IPO to come into existence in this video. Now, before a initial or IPO can be out there in the public, they would have to present what we call a prospectus. Now, this gives you a breakdown and history as to what the company is, and it provides you as well with a forecast for the future in how they want to be able to have the success. It's like a succession plan for the future. So they tell you exactly where they see themselves in the future, and you as the investor, you can decide if you want to go and invest in this company by buying shares, purchasing shares from them. There's normally an opening price, so that there's an initial price that you can be able to purchase that share at. So a very important thing, one of the main reasons as an investor that you want to really look at is you want to see if your money will grow. If over time you can be able to see where you're earning from this, there's a profit being gained rather than a loss. So sometimes you may have a $1 that you can purchase it at, and you have a specific amount of units that you have to purchase it as well at. So when you look at that market, say for example, you have 5,000 persons who purchased this $1 and it now is on that market and it's going very well, what really will happen is that that price will go up. And so if this share is doing very well and you are seeing where you're getting returns, so these returns are called dividends, which I'll get into another time, you are able to see where this investment is a very good investment. So those are some things that I'll be looking at further down. These are the main reasons for a privately owned company to go public. One, they go public because they want to raise additional capital, right? So they will sell shares to the public for reasons of having an expansion of their business for them to do a fund research, for them as well to develop or pay off their debt. So they have fear for development, I should say, or to pay off a debt. So several times companies will come into the market and people will just read the prospectus and they'll be able to see what they're about. Keep in mind, the time that they place it on the market, sometimes they give you that when they give you that end date when it will be closed. Most times, depending on how persons are buying these shares, investors are going in and purchasing these shares, it can have or push that market to be closed before the date. So keep that in mind. Next reason is other avenues for raising capital, such as venture capitalists and private investors or bank loans. These sometimes can be very expensive for a company, so they may go public where it's less hectic and tedious for them to have to go through all of that. So they allow the investors to do what we have to do and have a part in their company. So we become shareholders in this company that is now public. Another thing is, when they go public in an IPO, they provide as well companies with a huge amount of publicity. So privately owned companies, they are now able to be seen by the public and have the opportunity to have persons say, all right, this company looks promising. I can go and I can buy some shares here, and it can help them to boost their publicity. This is something that is important for you as that privately owned company who have not yet been enlisted. As a privately owned company who wishes to go public, you would have to ensure that you have discussions firstly with your advisors to agree upon a initial price. Thereafter, your underwriter, which is the investment bank who manages the issuing of this company's shares, and they provide it to make it public to, which is the IPO, to make it public to investors. They would then come into play afterwards. So you have to keep in mind that you would have to do various comprehensive discussions, meetings, and have your underwriter go through and manage and review paperwork, financial disclosures, and statements to be provided. And it can really be challenging for them and time consuming. And so that is why they get an underwriter. What they do is they schedule time and create documents for investors or potential investors, which pretty much is called a roadshow. So the underwriters help with the management and preparation for an IPO. Just a little nugget to the privately owned companies or business owner who you have not yet gone out there into the public. That's some of the reasons why a company would go public. Now, if you know more about an IPO and would love to share that information, leave it below so that we can discuss more. On the Jamaica Stock Exchange platform, you can go and you can be able to see what the various companies that's already on this stock exchange market, whether the junior stock exchange or the larger market, you can be able to see how these companies are doing. If you know about this before, let me know. And if you did not know, place it in the comments. Thank you again for coming on, and I'll see you next week as we look at the requirements for opening an account. Bless you. While it is that they go public, they want to ensure that they can receive more from lenders. And remember that really and truly, this is where the company, they want to ensure that they can get more. Scrap that.